From the studios of Farm Journal Broadcast, this is AgDay.
The latest USDA report factors in a trade war.
Soybeans are the only commodity that USDA addressed relative to the Chinese tariffs.
Plus hay harvest in the northern plains and agribusiness technical indicators.
And they will encompass 90 to 95% of all trading activity.
Tariff impacts on cattle markets and embrace the muck. A muddy Friday farm sense.
AgDay, presented by the Chevy Silverado. High-strength steel for high-strength dependability.
Good morning, I'm Clinton Griffiths. USDA releasing its first major grain report, factoring in the current trade tensions between the U.S. and some of its biggest trading partners. Now, according to Bloomberg News, China's imports of U.S. soybeans are declining for the first time in 15 years. USDA's WASDE report showing China will bring in 95 million metric tons of soybeans in the 2018-19 season. That's down from USDA's June forecast for 103 million tons and about a 2% drop. Now, with China imposing retaliatory tariffs on U.S. soybeans, exports declining by 250 million bushels. But with lower soy prices, USDA says other countries made some additional bean purchases. New crop ending stocks for U.S. soybeans jumping to 580 million bushels from 385 million in June. New crop corn ending stocks coming in at 1.5 billion bushels. The USDA says this new report only considered trade actions which are already in place or have been formally announced with an effective date but not yet enacted. Pro-Farmer editor Brian Grady sifts through the numbers.
Soybeans are the only commodity that USDA addressed relative to the Chinese tariffs. It had a big impact in that year over year, U.S. Ending stocks are now projected much higher where they were projected lower last month. And then globally as well, year over year, we're now anticipated to see an increase in ending stocks there. So significant changes on the soybean side of things. But yet the soybean market absorbed it, and while it faced initial pressure after the reports, finished a little bit higher on Thursday.
USDA boosting corn production by 190 million bushels from its June acreage report estimate. Total production now sitting at 14.2 billion bushels. The corn yield unchanged at 174 bushels to the acre. Soybean production also boosted, now sitting at 4.3 billion bushels. Economists raising harvested acreage estimates and yield remaining at 48.5 bushels to the acre. Markets also reacting to the report. Joe Vaclavic of Standard Grain gives us his insights.
I think that a lot of traders and analysts have issues already with the legitimacy of the numbers. It's very difficult to say what exactly is going to happen with this trade war. It's very difficult to imagine where China is going to get beans come this fall when Brazil runs out of exportable supplies. But nevertheless, USDA reducing its demand projection for soybeans drastically today. And this is all despite the fact that export sales and commitments have been very, very strong and are actually running ahead of where they were a year ago. Yet the projection for new crop demand now below where it was a year ago.
The Ag Department trimming winter wheat production from last month's estimate, now sitting at 1.2 billion bushels. That's a cut of less than 1%, but it's 6% lower than last year. The national average yield for winter wheat is 48 bushels to the acre, down a half bushel. What a difference a year makes. It's cliche, but it's true, especially when looking at moisture conditions in North Dakota. This is the most current drought monitor map showing 80% of North Dakota is drought-free. Now compare that to last year when 94% of the state had varying degrees of drought, including a third of the state in extreme drought. This year, North Dakota farmers are baling a bumper crop of feed due to normal and above normal precipitation. Cliff Naylor reports from Grant County.
Timber Zinker is amazed by what's going through the baler.
You look around and it's green everywhere you look. Last year was just so brown.
In 2017, Timber and her husband Brett couldn't cut most of their alfalfa or mixed hay. Instead, they were forced to chop corn and baled oats and wheat for feed to get their cattle through winter.
The alfalfa is beautiful. I mean, haven't seen such nice alfalfa in a lot of years. Mixed hay is running really nice too, about bale and a half an acre on the mixed stuff and over 2 on the straight alfalfa.
Many livestock producers are benefiting from abundant rains that transformed thousands of acres of pasture from exceptional drought conditions into fertile fields of feed.
Feed costs are one of the most significant inputs that livestock producers have, and so having the ability to make some hay this year and to have what looks to be a very ample hay crop will make a huge difference on the bottom lines of livestock producers here in North Dakota.
Zinker says livestock producers feel they have a safety net this year, with enough or more than enough feed to get cattle through winter without having to buy and truck in millions of tons of hay. I'm Cliff Naylor, reporting for AgDay.
Thanks, Cliff. While the president threatens to throw another $200 billion in tariffs at China, fresh talks are yet to be formalized. And U.S. Treasury Secretary Steve Mnuchin facing tough questions over the trade fight from both Republicans and Democrats on Capitol Hill. Mnuchin's appearance came as China tried to step up pressure on Washington. The White House announcing a second possible round of tariff hikes Tuesday, targeting a wider range of $200 billion in goods. Mnuchin told the House committee that the president is very focused on free and fair trade.
I'm curious how the administration thinks about the possibility of a global recession.
And as I said, we are monitoring very carefully the impact of tariffs, and we will continue to do so. And we are very focused on economic growth and look forward to what hopefully will be a very big quarter of GDP and future growth for the balance of the year and next year.
Mnuchin calling the U.S. tariffs as moderate in size and aimed at leveling the playing field for American industry. The U.S. Climate Prediction Center continuing to ratchet up its expectations for the return of El Nino this winter. The agency says there's now a 70% chance that waters will warm in the equatorial Pacific from December to February. El Ninos can have big impacts on global weather patterns in the U.S. El Nino winters tend to be cooler and stormier in the southern U.S. It's rainy in California and warm in the Pacific Northwest and northern Rocky Mountains. In Brazil, however, the region is more prone to drought. Our own meteorologist, Mike Hoffman, joins us now. He has a look around farm country and a field check in today's crop comments.
Good morning, Clinton. As we heard from Cliff Naylor, hay production is going well in parts of the country. Steve sent this photo to our Facebook page. He lives in Highland, Illinois. He says they're cutting their 5th crop of alfalfa, and it's beautiful. And Sam Rhodes sent us this photo of a 2-year-old Olivia from Delphus, Ohio. She says the rain and heat the last couple of weeks has helped the corn to grow tall. As you can see, the crop is already silking. Sam says her little one drives this path straight to Papa's house. And taking a look at the wind speed forecast, not a lot as we start today. A little bit breezy, parts of the plain states heading through the afternoon. It'll get a little breezier, parts of the southwestern plains into the southwest, but you can see not much of the country seeing a lot of wind. Same idea tomorrow morning, and as we head through the rest of the day tomorrow, it does turn a little bit windier behind a pretty strong cold front into Montana and North Dakota. We'll tell you where that front's headed next coming up with our forecast, but first here are some hometown temps.
Plan for the unexpected with weather forecast updates. Local forecasts are delivered right to your cell phone each morning, making planning a little bit easier. Just text Weather6 to 31313 to get started.
All right, when we come back, we'll look at the charts for clues to market action. Technical trader Mike Flores joins us after the break. And later, trade tariffs and impacts on the cattle industry from our partners at Drovers.
AgDay, brought to you by new Delaro fungicide for corn and soybeans. Achieve personal best yields.
Let's take a closer look at how markets reacted to Thursday's reports. For that, we headed to Florida CME in Chicago.
If you couldn't tell by the necktie, it was a USDA day, and we got some good news in the corn market, something that the bulls desperately were searching for. We got a friendly carryout number, which encouraged some new buyers to step into the market, but I think more importantly was encourage some short covering. If we're able to get some follow-through momentum going into the weekend, I think this sets us up into a good spot going into next week's trade. Moving over to the soybeans, a little bit different of a story. We actually saw a bearish number, but we saw some buyers step into the market, which I think is encouraging going forward. The fact that we could not break down on a bearish report is bullish in our mind. This has been Oliver Slope with Blue Line Futures from the floor of the CME.
Today at the Agribusiness Desk, or I guess not at the desk, we've got Mike Flores of Flores Trading. He's going to talk about some of the technical indicators that he's watching in these soybean and corn markets. And Mike, this has been fascinating to watch.
Right. We talked earlier that I thought that we were going to make significant lows this week. And I got a couple of trading systems on this chart which kind of defines it. There's two systems on here. One's a Bollinger Band and one is timing cycles. In a Bollinger Band are these blue lines. And whenever a Bollinger Band is 2 standard deviations away from a 20-day moving average, they will encompass 90 to 95% of all trading activity. When you exceed them, when you go outside of the bands, that's where the trading opportunities lie. So like here as an example, the market's way above it, you know the market's going to fall. It falls down to it. Down here, it's kind of at the low end. Up here, the high end. And you see it keeps going back and back and back and forth. Now we are way below it, signaling that we're going to go back towards the mean. So that's the first thing you look at. The second thing, these black lines, they're timing cycles that I use. And markets tend to change their trends after about 45 periods of time, plus or minus a week. So these highs are 45 from this high. This low is 45 from this low. This is 45 from where we are right now. The time is signaling that we also have a bottom. So when you get a combination of both things saying a trend is going to change, or a trend is changing, that's when you take action. So we have very strong buy signals. This is a weekly chart, and weekly charts tend to give you longer periods of time to move.
Right.
Then in the next chart,
if we flip to the next one,
this is a monthly soybean chart. Same situation, the Bollinger Bands. You can see when they exceed them, too much on the upside and too much on the downside, there's a change of trend. So you've got, this is the second month below the Bollinger Band on the monthly chart. This is a real long-term chart. So you've got the weeklies and the monthlies signaling the same thing. And I think you're going to see a multi-week, multi-month change in trend to the upside on soybeans.
Okay, all right. If we flip over to corn?
Similar situation, same thing on corn. This is a weekly chart on corn, and you're 3-4 bars below the Bollinger Band now. You're also right now 45 weeks from this low here. So there's a change in trend also in corn. You're going to expect on both of these markets at least a 50% correction of the down move you just came through.
Okay. Well, it is an interesting tool to use to be able to try to give you some sort of indicator of what these markets are going to do over the next few weeks. It is dynamic.
They've priced in all the news that is available to mankind. So it's already in the price already.
All right.
So there's change coming to the upside.
All right. I think people will appreciate that. Thanks, Mike. Thanks for the lesson. We'll be back with more AgDay in just a minute.
For a free 2-week trial to Mike's trading recommendations, call Flores Trading at 800-841-2108. AgDay, brought to you by Top Third Ag Marketing. Farmer first with a plan for every market.
Welcome back to AgDay. Here, meteorologist Mike Hoffman. Mike, it's been hot. It's been hot. It's been hot. Is it going to cool off at all?
Yeah, it is. We're going to see a flip-flop in the pattern. We've been talking about this for a week or two, and it's going to turn cooler in the east eventually. It's just not there yet. So that means it's still pretty hot and humid across most of the Corn Belt, especially the central and eastern sections, because you're getting some scattered showers and thunderstorms right now from southern Minnesota all the way back into parts of Nebraska. Hit and miss along the mid-Atlantic with that cool front, and also in the southwest with the low that's always there this time of the year, and that means more activity during the afternoon hours in the Four Corner region southward. This cool front very slowly coming southeastward. There'll be multiple little areas of low pressure moving along it. Each one of those will increase your chance for getting a shower or thunderstorm. As we head through tonight, you can see how the leading area of low pressure moves into the western lakes, the other one moving into parts of Kansas. And then as we head through the day tomorrow, those will continue to spread along the front, increasing the chances for showers and thunderstorms in these areas. These will be hit and miss variety in the southeast, kind of typical for this time of the year, and the southwest, as you can see there. Now this front, this has some fairly cool air behind it. This high pressure coming right out of northwestern Canada, and that's going to first spread some cooler air into the northern plains as we head through Sunday, and then as we head into next week. All of that's going to flood farther east through most of the Corn Belt, Great Lakes, Ohio Valley, all turning a little bit cooler as we head through next week. There's a precipitation estimate over the past 24 hours. Adding in the next 36 hours, you can see how we're going to add some More moisture across most of the north central plains into the western Great Lakes. Again, these will be hit and miss Florida, the southeast, and the southwest. The main focus is going to be along that slow-moving, southward-moving cool front. There's the high temperatures this afternoon. You can see into the 90s from Chicago southward. North of there, not quite as hot, but again, the cooler air is still behind that next front. Low temperatures tomorrow morning, going to be comfortable across the northern plains, but still pretty muggy central and southern plains, southeast as well. Heading into the day tomorrow, you can see that cooler air building over western Canada, but it's still pretty warm northern plains and definitely hot farther south. There's the jet stream. You can see how things stay pretty warm. Great Lakes into the northeast as we head through the weekend, and that first shot of cooler air coming in, and we have another trough coming in that digs into the plains first of all as we head through the end of next week with more cool air. That's a look across the country. Now let's take a look at some local forecasts. First of all, Santa Fe, New Mexico, partly sunny and afternoon thunderstorm likely, high of 78 degrees. Peoria, Illinois, hot with a mix of sun and clouds, high of 92. And Portsmouth, New Hampshire, mostly sunny and quite pleasant, afternoon high of 76.
Up next, catch up with the beef industry, including the potential impact of Chinese tariffs on the cattle market. And later, a Farm Sense look at the pleasures and frustrations of mud.
Your next piece of equipment is on MachineryPete.com. Search equipment from dealerships across the country to find what you're looking for. Only on MachineryPete.com.
From our partners at Drover CV, the National Cattlemen's Beef Association asking the Trump administration to end those retaliatory trade tariffs, saying it may cost the industry millions of dollars in jobs. NCBA's Colin Woodall saying just 1 year after reopening the Chinese market to U.S. beef, the total tariff on U.S. beef shipped to China is now 37%. They say that immediately cost the U.S. beef industry $30 million, closing access to that market. U.S. producers potentially stand to lose $70 million by year's end.
Woodall says the tariffs are jeopardizing access to a potential $4 billion market. Concerns over the president's trade policy come at a time when beef exports had reached new highs. The value of U.S. exports climbed by nearly 28% in May versus 1 year ago, with international buyers purchasing more U.S. beef and paying higher prices than they did last year.
Henderson says, of course, those exports occurred before many of the current tariffs against U.S. goods were in place. Meanwhile, despite those tariff challenges, Cargill reporting its latest quarterly profits doubled. Like Henderson mentioned, the company also pointing to higher demand for beef, even in the face of trade uncertainty. The privately held company reporting net income of $711 million in the fourth quarter ending May 31st. That's more than double a year earlier. And the Food and Drug Administration hosting public meeting on Thursday on lab-grown meat. The all-day session meant to get input on regulating an emerging food sector using cells from animals and growing them into tissue for burgers, chicken nuggets, even spicy tuna rolls. Both FDA and USDA regulators believe they have jurisdiction over these products. FDA is asking for input on what should be considered to ensure cultured meat and seafood products are safe to eat, including what ingredients might be used and how the process works. To love or hate the mud life, Farm Sense after the break.
Is now the best time to sell your old equipment? Pete's Pick of the Week keeps you up to date on current market prices, making it easy for you to know when to sell your equipment for the best possible price. Text PETE6 to 31313 to get started.
In the Country, sponsored by Kubota. See the hardest working tractors in ag at Kubota.com or visit your local Kubota dealer today.
When we were kids, our summer days were often spent in the backyard sandbox, filling up trenches with water and making rivers of mud. Well, in Wayne County, Michigan, Mud Day is an official event. A local park in Westland, Michigan is soaked, and kids 12 and under are invited to wear their old clothes and enjoy the muddiest day of the year. The kids enjoy games, tug-of-war, wheelbarrow races, and even crown a king and queen mud. There are no showers at that event, but kids were hosed off by the local hazmat crew. It's funny how our opinion of mud can change as we age. As kids, it's fun, slippery, squishy. And as adults, when your truck or tractor is stuck, mud is nothing but a headache. Some adults, however, swear by the healing power of mud. A mud bath believed to help reduce aches and pains, help you relax and reduce stress, detoxify the body and balance your pH levels while leaving your skin oh so soft. Well, I guess I'm not ready to get that deep into mud pit platitudes, but truth be told, there are lessons here. Things like don't forget to have a little bit of fun. Sometimes life is just dirty, frustrating, or simply out of your control. Remember, without soil and water, farmers would be out of business. So embrace the mud. Remember those feelings when you were a kid, when a day in the grit and grime was the best way to spend an afternoon. Who knows? A little mud might just slow you down enough to realize a few of life's simple pleasures. If you'll let it, of course. That's all the time we have this morning. We're sure glad you tuned in and spent part of your day with us. For all of us here at AgDay, I'm Clinton Griffiths. Have a great day.